What is up, guys? It is Joe Caruso here with another trade breakdown video. Actually, make that two trade breakdowns in this video. So I'm going to be going over two gold trades that I had called recently in Trader Society Academy. One I had called October 3rd. The other one was called on November 5th, I want to say, November 8th. So about a month apart, two trades, both buys, both on gold, both hit full take profit. So I'm going to start with reviewing the trade from the beginning of October. Now, this was before the Israel-Hamas war had really started going. That news had came out, and that was what really propelled this thing, really propelled gold flying through the air. There was the rumors of the war. And at the very bottom where we entered, this is the daily time frame that we're looking at right now, we had NFP. So the trade got triggered shortly after NFP. NFP actually created a great entry opportunity, which I took advantage of, got in, didn't see any drawdown. So I want to go on the weekly time frame just to show what was going on the weekly time frame, because both of these trades actually had some weekly time frame confluence. I want to say that I had a trend line coming down from the top over here. So we could see this was definitely a trend line retest. Trend line touch, trend line touch. It was a break. This was a retest. We basically had a weekly shark fin that was happening. Now, the entry I used was a combination of several factors, one of which was the weekly 200 moving average. Notice that we were getting close to a shark fin, so I look, what's our nearest point of interest? Weekly moving average. Look to the left, we have structure in that area. I made sure that my stop loss was going to include that area. Now, my stop loss included, it gave room for both of my entries. I only got my first entry in. I never came low enough to hit my second entry. So I didn't get both my entries, didn't make as much as I wanted to, but the trade ran really smooth and was still an amazing trade. Overall, so like, because my stop loss that I had drawn was about 150 pips, right? $15 on gold, rather large, but I take a heavy position about halfway towards that stop loss. So I split my risk up into two positions, take one at the earlier spot, take a bigger, heavier one at the later spot. That's the entry that really makes me the most. And then I'll manage my early position by using it just to take partials, or I will close it at break even just to completely eliminate the risk. Now, I also believe I had another trend line coming through. I know this one isn't quite as clean, but you can definitely get a trend line going from quite a ways back on the weekly. We call this an AOI trend line because it does cut through a little bit, but notice how many touches this trend line gets over here on the left. So even though there's a period of break, it still was respected very well with all of these touches. Once here, twice right here, twice right here. Then you have break, break. Then you have touch over here, and coming back again. So what really helps me solidify and find where I want to bring my trend lines is moving averages, structure. That's really what helps me pinpoint my endpoints of my trend line. So I had crisscross on the weekly time frame with the weekly 200 as my area of interest. Our daily was a complete shark fin. Now, this was interesting because I was actually in this trade for most of that week. This trade didn't take off till NFP Friday. I was in the trade, kind of bouncing around in the consolidation. I want to say Tuesday, Wednesday, Thursday. For about 3 days, I was hitting break even. I would take partials at 80 pips. It would come back break even because it didn't really move much, but I was expecting this move to happen. Again, our entry was on the Friday the 6th. I called it on the 2nd or the 3rd, which was when I had gotten in. And this is what we look like on the 4 hour. Our 4 hour time frame, my stop loss also included the Bollinger Bands on the 4 hour. I noticed that our Bollinger Bands were doing our signature pattern that I look for on the Bollinger Bands, which is the steep Bollinger Bands, right? And then we notice that from those steep bands, you typically will see them go nice and wide and then nice and flat. And this little bump over here is part of the flattening process. Steep, wide, and then flat, which is what was going on here. And now when you have divergence while the Bollinger Bands are getting flat like that, that is an entry in itself. You can take that right off the 2.0 Bollinger Bands. Now on the 4-hour, I was expecting that we might come a little bit lower, hence why I broke up my risk into two separate positions. On the 1-hour time frame, we did the flat Bollinger Bands, which is exactly what I was just talking about. We had the steep bands, they went wide, they went flat. Price touched the Bollinger Band, and price practically never broke the bands. Now, this was again when NFP happened. NFP spiked down. I took my entry. Again, I saw maybe 30 pips of drawdown, and then we whipped back up. The entries that I had given, the entry zone I had given out in TSA was between 1815 and 1805. So that was 1810 was going to be my second entry. We actually came extremely close to touching that. So, I mean, I was literally so close from getting that second entry in. The spreads was part of the reason on price. It was like, I want to say 7 pips away, but because of the spreads, it actually was much farther because spreads were rather wide when NFP happened. NFP actually supported the sell. So that was also why I waited to take my second entry. This is very important because if news does not support the direction I want to go in, I'm very cautious about my entries. So I noticed NFP supported the sell. It started selling off. I wanted to give it a little bit of room, so that's why I made sure not to enter too early. Got in. It practically completely played out, right? I mean, there was no price, never came back. It took off. The stuff with Hamas and the war went on. And we just kept on going in that direction. So this trade had 1 hour had flat Bollinger Bands. The 4-hour had divergence going on. I want to say that the 15-minute, I just want to double check before I say it, but I believe the 15-minute had a shark fin. Forgive me as I scroll through here. And if we look right where that entry was when NFP happened, we had a 15-minute shark fin turned divergence. So additional confluence. Now what's crazy is this was a 15-minute shark fin that turned into 15-minute divergence, and it happened right on top of the weekly 200 moving average with a daily shark fin with 1 hour flat Bollinger Bands right at that entry. Like, I just wanted to show how this lined up and what I was looking at on all these different time frames when I took these. The trades that line up across the board like that, as you notice if you watch my other trade breakdowns, when you have this confluence that is just so obvious, the trades play out very well. And that's how it should be. You want the trades to kind of just come to you and you see it laid out and say, okay, this, it has this, it has this. On this time frame, it also has this and this. Those are the trades that come to you. The ones that you force are the ones that, hey, it's been 3 days. I haven't taken a trade. I really want to take one. This 1 hour doesn't look great. The 4-hour doesn't look great. This level is okay. It's counter trend. And the 5-minute gives me a sort of a shark fin. I just want to get in, right? Like that's the trade that you're kind of trying to force versus the one that falls into your lap. Now, my exit on that gold trade, take these bands off. This is the daily time frame again. I wanted to be out before the 50 moving average on the daily. I wanted to be out before, most importantly, market structure, right? Just in case we were bearish, I thought we were going to sell off of that. So I wanted to be out before that got hit. Little did I know that that buy I called was going to run up hundreds of pips. Little did I know just how well for the next 2 weeks it was going to go up in a straight line. Which is crazy. But then once we started to pull back, now in this time, I didn't take any other trades on gold. Because I trade mostly the higher time frames, except for some 15-minute scalping that I do on US 30, I really don't touch lower time frames besides trading US 30. So this is a great example of how on a certain pair, there might only be a couple trades that month. Some pairs I don't trade for a couple months. It really all depends. Gold gave that really nice trade in the beginning of October and this really nice buy in the beginning of November. And they kind of just fell into my lap. So the entry on the first one was a weekly 200 moving average with a daily shark fin also. We had 4-hour, 1-hour confluence. This trade on the daily time frame, it was the touch, the break, and retest of the 200 moving average. It was also an order block on the daily. As you could see, this white line, which I drew, was the entry. Now, this one I also called about a day or two in advance. So entry was on the MA. There was the order block. I'm pretty sure we had a trend line on this one too. Yeah, I want to say it was like, maybe not quite all the way up here. I know I had a trend line drawn. One of these that you kind of, this actually makes sense if you cut through this way, because notice how you get the candle bodies here, candle bodies here. So it makes up for the break and the break here. You do have this break, but then you have touch, touch, break. And the most important thing when you draw these AOI trend lines, where you're connecting areas of interest, you will cut through some areas, but most importantly, you have to be connecting points, and your line has to make sense. There has to be multiple points of reactions, preferably more reactions than there is breaks. There was that, and I also had a trend line going like this. This was my crisscross. See, like this is perfectly fine to me. Creation, you have the respecting the touch over here, then a break, break, touch, touch, take off, touch. So you have more touches than you do breaks. Both of my trades were trendline crisscrosses, right? On higher time frames, on either the weekly or the daily. So this was trendline crisscross on the daily time frame. I don't remember if this one was a fib level. It was. This is a perfect 382 fib level, trendline crisscross. I'm just going to get rid of the old stuff so it's not in the way. 382 fib level, 200 moving average. So I want to show how it's not just I took it at the moving average. It was I took it at the moving average, the 200 moving average. That was also a daily crisscross. That was also a 382. That also had that order block and some structure. And now when we scale down and look at the lower time frames, we will notice that the 4-hour had a nice and clear divergence at the 800 moving average. Notice where the candle bodies close, because this is a pretty important factor that I want to point that out, because I do pay attention to when candles fully break something, when they wick out, and when they just completely fly through something, right? Where the candles close, the body is very important. The wick is not very relevant, because as you notice with gold especially, you can see massive wicks. Doesn't signify that price was going to keep going that way. In many instances, it wicks out, it goes the other way. So on this yellow line, which is the 800 moving average, we have divergence present. We also have our Bollinger Bands that flattened out, which is what we like to see. Flat Bollinger Bands mean that momentum is slowing down. Think of Bollinger Bands as a slide. A steep slide, price is going to keep going in that direction, and rather quickly. When your Bollinger Bands are flat, that means that momentum is ready to shift. So again, you could follow a trend and notice how the Bollinger Bands look. When it just rockets through all of the structure, notice how steep those Bollinger Bands are. Steep on this way up, steep on this way down. But what happened at the bottom? Flattened out. What happened at the top? They flattened out. What happened at this bottom? They flattened out. So it's a recurring pattern that if you do some back testing and some studying of the charts, you will notice this pattern happen over and over again. So this trade, daily 200, daily crisscross, daily 382 fib level, 4-hour was divergence at the 800. Not a single candle closed below that 800 moving average. Every single candle had a candle body touching on or above the 800, signifying that that area was successfully holding up. Only wicks were below that yellow line. So 4-hour had divergence at the 800. Our 1-hour time frame had shark fin turned divergence. Price went down. So where the shark fin happened was right here. Price went down. TDI went up. That is divergence. So we had divergence. Once price hit the 1 hour 50 moving average, I called for moving stop loss to break even and taking partials. By that point, we were 2 hours into the trade and we were almost 200 pips up, about 150 pips in profit. Also, we hit this, right? So I was pointing this out in the group. We hit structure going against us. If you notice, the assumption that I make every time I'm in a trade, especially when it comes to the management, is what if I'm wrong about the direction, right? Because you don't know that the direction is confirmed until, at least on the lower time frames, it breaks areas of structure. So until this support proved that it was not going to be resistance, until it actually broke, we did not know if this market was still bearish, because if it was bearish, we would see support, flip, become resistance, and it dropped lower. So we don't know yet that the trend is going to change, hence why we put our stop loss to break even every time structure going against us like that gets hit, especially if it has a 50 moving average, and definitely if that moving average makes hidden divergence going against you. That's where the instance becomes, consider taking some partials. All right, it's already past a 1-to-1 ratio at this point as well. It's really not a bad thing, especially if you're doing prop firm challenges. Take the partials. Take the partials if you're trading a prop firm. Don't try to risk the big home run and then it not happen, and then you'd be very disappointed and that lead into bad trading decisions. Take what the market can give. Take what the market gives you, because you're not always going to be completely right about the trend shifting. So 1 hour 50, I called stop loss to break even. It never came back, so our break even was never tapped. Took a little bit of partials, and the next day the move just continued and hit full TP. I went over our 1 hour. I want to just double check, how did our lower time frames look? 30-minute gave you your picture perfect Bollinger Band scenario. Bollinger Bands are steep. You get your low point on the TDI. Bands go wide, then they go flat. And what happens when they're flat? Notice that there was it was actually a divergence that turned into a shark fin. Your lowest point of the TDI was over here. Price went slightly lower, TDI went slightly higher, created a shark. So you could have entered this based on 30-minute shark fin or based on that divergence with the Bollinger Bands. Sunk a little bit through it, right? So you would have got 20 pips of drawdown, which isn't really that bad. 20 pips of drawdown is not bad for the 350 pip take profit that was hit. So you had confluence on just about all of your time frames, your daily, your 4 hour, your 1 hour, your 30-minute. And because our 30-minute was a shark fin, the 15-minute was the only one that did not really give anything, but your 30-minute, 1 hour, 4 hour daily all gave confluence. So I'm just going to fly back to that daily time frame real quick and look at the overall move. Not every day is a trading day, especially if you are just letting the trade come to you. I was trying not to counter gold and not to trade in the opposite direction, right? So that's why these were the only trades that I had taken. Essentially, I was just following the trend and waiting for the highest probability areas to happen. If I was incorrect about the most recent trade, I would have just taken it at the 50 moving average. That was where my second entry was going to be. I was perfectly fine because my risk to reward was 1 to 3, 1 to 4 on both of these trades. I was perfectly fine with potentially being wrong and then just getting a better entry a little bit further. Although both my entries did have enough room in case that next area of confluence, which was structure on the bottom, if it came a little bit lower, or the 50 MA at the top entry, if it came a little bit lower. Both trades were, I'm not just saying they're great because they played out, but they're great examples of how the confluences work together, how the Bollinger Bands came into play, how there were moving averages, how the TDI had shark fins and divergence, and how there was multi-time frame confluence. If there's one thing I can stress about to pay attention to with these trade breakdowns, or what I'm trying to emphasize, I really want to help people utilize the Bollinger Bands more, because they really can make a difference with reading overall market, the strength of the market. And they also help really well when you use your lower time frame Bollinger Bands with your entry, right? Divergence with flat bands is an entry. So when you have 30-minute flat bands with divergence, you could take it at that 2.0 Bollinger Band, especially if you're inside a 4-hour shark fin, inside a daily shark fin at a moving averages. It's a great way to get a perfect entry. So if you don't, the best way to do it, like watch this video, pull up a chart and start to test some of the concepts that I'm talking about. Start to look at some of the Bollinger Bands and how they play out at major highs, major lows. When you're in 4-hour trades, look at your 1 hour, 30-minute, 15 Bollinger Bands and see how they could be used. Could you have used divergent Bollinger Band entries? Because a lot of times that gives like a perfect entry. So I'm not saying don't just take my word, but look at the charts and actually back test it yourself. But that summarizes these two breakdowns on gold. Thank you guys for watching these trade breakdowns. I hope they are helping you guys and helping improve your trading. And there will be plenty more videos to come. Please make sure you like, comment, and subscribe for more videos like this. Thank you.